Most people are taught that there are only two places to put their money: taxable accounts and retirement accounts. What if I told you that there's another bucket that no one is accounting for? And this is where corporations, bank, billionaires, and really wealthy people leverage. Today, I want to talk about the insurance wrap strategy, which is a strategy that's been around for decades, and a lot of people are currently not talking about this. I also want to explain why it exists and why it's extremely important and why you should consider putting your money into this type of. An insurance wrap simply means structuring an insurance inside an investment vehicle and using that to be able to get some tax benefits that you normally would not get if you were to take the investment yourself. The policy holds cash value without triggering taxes, and you're able to replace investing. You're improving how capital moves. The structure matters more than the product itself. Not all policies can qualify for this. Now, why do tax benefits exist? Tax benefits were actually instituted by the government to reward people who do estate planning, because if you do adequate estate planning, that means that the government wouldn't have to care for your family and your well-being. So that those people that had things in place got rewarded with tax benefits. Some of the tax benefits available are tax-free withdrawals, tax-free gains, loans, and tax-free debt benefit to anybody that you put as your beneficiaries. Loophole. This is a policy. Let me explain how the strategy goes into a properly designed policy. And instead of withdrawing the money, you borrow the money tax-free and you use that to do investment or any other thing that you would like to do. And the money that's in that policy grows tax-free and still tracks the performance of the S&P index. These are not income. That is why they are not taxed. Borrowing from the insurance policy using the legal document that they provide and using your policy as collateral. A lot of people have actually leveraged this strategy to increase their asset count so that they are able to get higher loans that they normally would not get if they did not have this policy. Talk about the dual growth and strategy. This is where things get really interesting. While you're borrowing money for investing or business, the cash value in the account still grows. So you're taking out a loan, the money that's in there is still growing while you use that money to make an investment, and that's tax-free money. And after you do the investment, you can choose to put that money back, and the policy that you have never stopped growing. It kept moving. Having to sell any assets or triggering any tax. You literally get liquidity without selling any assets or triggering any taxes. The flexibility is what creates the stability. Now, who has used this strategy before? What if I told you that one of the most popular franchises, McDonald's, actually borrowed from their life insurance policy to expand their franchise? JCPenney, when they were on the verge of bankruptcy, actually took out a loan from their life insurance policy to expand their business and prevent bankruptcy. This strategy is not just available to billionaires or business owners. Anyone can use this. That's why I'm spreading the education to show you that this is something available, and this is a great tax advantage growth strategy that you can start utilizing right now. It combines growth, tax savings, and safety. In some of these policies, it's also a great way to avoid the volatility in the market. For example, when the market crashes, you have a protection where you hit the floor and you can get anywhere from 0 to 2%. Your policy does never crashes, which means that when you have this policy in this tax advantage vehicle, you are relatively safe and not exposed to the volatility of the market, which is a great strategy for some investors that are conservative or at a point in their life when they are not willing to take that risk. Also, it's leverage because you're able to borrow this money while it's still working for you and use it to do something else and put it back in a completely tax advantage strategy. What you have is never learning about the tools. Now you have the tools. So make your decision on really the best way to grow your wealth. Are you going to grow it the regular way that you've been growing it? Are you satisfied? Or are you going to look into some strategies that wealthy people and smart business people have been using in the past to really help your family? Because if they are leveraging their big earnings on tax advantage growth and you can do the same, ask yourself, what is stopping you from doing the same thing and taking the same action? If you need help on how these things works, please leave a comment and feel free to reach out to me, and I'm happy to explain exactly how everything works. Thank you so much and see you next time.